In this video, I interview a gentleman that literally made $20,290 in the matter of 90 minutes scalping gold. So if you'd like to become a better Forex trader or make more money as a Forex trader, in this video, I'm actually going to interview him. He's going to break down exactly how this happened, his entire strategy for scalping gold. So if you're interested in learning a scalping strategy, then make sure that you watch this video in its entirety. So with that being said, here I have Yuuya Kato, who is one of the best traders that I know. He's one of the most consistent traders that I know. He's a 14-time funded professional prop trader, and he is impressive with his ability to trade. So what I want to do really quickly is just interview you, Yuuya, about this trade where you literally were scalping gold. You made over $20,000 in a trade. And this, guys, this isn't a demo account. You know, this is a real live account. We'll put the screenshot up on the screen or something like that. A real live account. So will you just walk us through this? Like how did this come to be? Like, what were you thinking about with this trade? And maybe if you could break that down, that'd be awesome for everybody to see.
Yeah, so I'm going to start sharing my screen exactly like the exact moment that I took this. And I do remember it, you know, clearly just because of the fact that it was one of my bigger trades. I'm not known to notoriously have big trades. On occasion, I do because in a sense, like I don't really try to force and swing trades, right? I'm more of a scalper. I take my 1 to 2% and I'm okay with that. And over time, it adds up to become this one amount, right? So this trade was actually on May 10th, right? So essentially what I was looking at is that I understand that gold does move a lot, right? So gold is a very high volatile pair. And what I would always tell people is that when you have volume plus volatility, you create this thing called momentum, right? Momentum is exactly when you want to be in the market. So when you have momentum in the market, and for example, momentum is what we see right here when impulse pushes. You know, you see impulse push right here. You also see impulse pushes right here as well too, and then right here. That's momentum, and that's exactly when you want to be in the market. So you first have to ask yourself, when can momentum happen? So you look at the equation. Essentially, momentum happens when there's volume and volatility. So you have to ask yourself, when do you get volume? Volume occurs when, you know, the big banks are open. So that's London session, New York session, and the NYC session. So looking at this right now, these are all converted into the Japan time where I live right now. So currently, as I'm looking at this, the potential of gold moving would happen essentially one right here at this level at 16 o'clock, because that was when the London Open happened. But as you can see, there was no movement here. But I did essentially take one opportunity right here because of the fact that I thought, okay, potentially we're going to get, you know, a move during the London session. And then, you know, we had a low break. So I took this opportunity. But then eventually I got stopped out, you know, and obviously I wouldn't have got stopped out if I had placed my stop loss over here. But I'm not trying to think of having bigger stop losses. I have set of rules for myself to keep, and I want to stick to it. So, you know, I expected volume just because it was the London Open. And also when you get a lot of volume, you get volatility. Volatility just simply means manipulation. And a lot of people feel that manipulation is a bad thing, but manipulation indicates that there's a possibility that momentum can be created, because when you combine these two things together, you create momentum, and the momentum is the impulse move that we want to catch. So essentially, I did get stopped out here. And then also I took another opportunity again, but then got stopped out as well too. But that second opportunity was a mistake of mine, because essentially I gave myself about an hour to an hour half of trading, you know, the open. And essentially after that, usually the volume starts kind of dying down and slowing down. And then I wait for the next open. But my mistake was that I felt that, like, you know, the move was going to happen and I didn't want to miss out. So the bad habit of my FOMO kind of kicked in. And then I entered, you know, a trade just to hope that I can catch the move. But then with volume, when there's low volume, you have a higher percentage chance of getting stopped out. And that's exactly what happened. Within this 1 hour candle, I entered somewhere around here and then eventually got stopped out at the same area that I put my stop loss before. And then I had to take a step back and then just tell myself I'm going to be waiting for the New York Open or the NYC Open, because that's another time where volume is at its peak. So looking at it, this right here, if I will looking at this candle right here, right? This is the hour candle. Obviously, I don't really trade on the hour. I'm trading on the lower time frames, but let's just look at this hour candle, right? This is essentially about an hour after the New York Open. So the New York Open, all it did was just push up a little bit and kind of consolidate. So if we would look this on the 15-minute right here, I'll go back and sorry, we have to, oh, actually 30. So let's look at the 30-minute right here. So as we look at the 30-minute chart, we kind of see that during the New York Open, all we kind of did was just consolidate, and then we can identify, you know, this range that was created, right? All through the New York and also the London session. And then as the NYC started approaching, which is 10:30 my time, we saw this huge bearish engulfing candle, right? So essentially what I did was I took this trade hoping and also knowing that, you know, looking at like the previous momentum that we had, that we were going to continue and break down. And once we broke down this strong support on the hour and the 4 hour, that we could possibly have a big move, right? So what I did was, as the New York started approaching, and then I got confirmation on a lower time frame that, you know, we had rejections at this 1863 level, I did take this sell right at 1863 because it is a supply level here on this range right here, and we also have a demand level right here, right? So I took a sell right here with only a 10 to 15 pip stop loss, which is very small for me, and that's part of the reason why I was able to run a 10 lot. A 10 lot on gold is very scary for me usually because I usually keep it under 5 or less, but I did run a 10 lot and I have my stop loss here, and I was assuming, and I was also predicting that the momentum will come in place when the NYC opens, and that's exactly what happened. So the NYSC created volume, and also with volume there was volatility, which created this momentum, right? And then as we came down to that low of that range, we kind of retraced again, and then during the hour after the NYSE Open, we carried a lot of volume and was able to break the strong support on the 4 hour and the 1 hour. And from there, we just kept on just gaining momentum, you know, and just pushing, right? So that's exactly about right here, 30 minutes, an hour, and an hour and a half. I was able to close, you know, my trade in about 100 and something pip profit, you know, which essentially made me roughly about $20,000 or so, you know, and essentially at the end of the day, what I should have just done was just wait for the opportunity where momentum was going to be at its peak. And that's usually during the New York session, especially with gold. But that's kind of essentially kind of how I break down, you know, and look for these kind of opportunities. And at the end of the day, to keep it simple, is to scalp, you want to trade when there's going to be volume. That's essentially during the London Opens, the New York Opens, or the NYSE Opens, because with that you create volatility, and when you combine those two things together, you have the potential to catch these huge momentum pushes and these impulse pushes. So that's essentially kind of the breakdown of, you know, that trade that I just took, which was one of my biggest trade that I ever got. And hopefully I'll be able to find more in the near future.
Hey, if you guys thought this video was helpful, then go on over to fundedtraderfasttrack.com. If you'd like to actually trade live in the morning, each morning with Yuuya, a 14-time funded professional prop trader, you can trade this exact strategy live with him every morning, like a bunch of people inside of our trading team do. Then go to fundedtraderfasttrack.com, and I promise you're going to absolutely love trading with Yuuya in the morning. And if this video is helpful, please like, subscribe, turn on the post notifications, and feel free to check out some of the other helpful videos that we've made on the channel here.